Hello, welcome to McBoss Capital channel. My name is Michael Chu. Today is market recap video for week ending June 28, 2024. And right now in Canada, the inflation rate rose to 2.9% based on the report out this week. So it did jump back a little bit higher. I think the last one was at 2.7 or 5% or something like that. So because they cut rates last month, so now they're gonna have another meeting on July, I think 24th or something like that. So I'm not sure if they're gonna cut rate again just because of this, right? So yeah, I just want to bring that up again. The U.S., we also saw a report from the U.S. On Friday about their inflation number. Let me show you the notes here. Yeah, so the PCE, Personal Consumption Expenditure Price Index, it met economist view, so it didn't really jump higher. And it says here it is now at 2.6%, and this is the slowest rise since March 21st. So that's really good news. And the headline PCE now, it's been holding steady for the first time in 6 months, and also slow to 2.6% on an annualized basis. So here's the Investor Business Daily newspaper. This is the chart right here. It's you can see it says that the PCE price index was flat in May. You can see right here the blue bar is basically flat, and then the core PCE is also not that high, which is I think 0.1%. So that really low compared. You can see the last few months as well. And then overall in the year annually, you can see it now dropped to 2.6% core. So also very good, lower since right here March 21st. So it's coming along, and I think this is really good for the Fed, to have the possible signal to cut rates by end of this year. And we'll see how that goes. And then this is the service price here. May it's also kind of went down a little bit, 3.4%. We'll just jump over to the CME futures here, signaling the Fed in the July 31st meeting, it's going to hold rate steady at around close to 90%. And then on September 18, this one has been fluctuating. Even on Friday, I think it went as high as 60 or above 60, but now it's back to 57%. So it still anticipate a rate cut, but it's not like it's not even fully strong anticipation here. This number could probably still fluctuate in the next month. So yeah, we do have the July 31st meeting, so we still have at least 1 more month of data before the Fed might may consider anything new. So we'll see how that goes. So this is the Atlanta Fed GDP now estimate for Q2, and it just came out on yesterday, June 28th, and it is 2.2% at the moment. So which we are ending the quarter now. So overall, we saw some fluctuation here around early June, and then went back up, and then now it also came back down. So overall, we're still seeing strong growth, 2.2% at this moment. Still okay. So the economy, again, everyone is counting on a soft landing, but the Fed, probably the decision for Fed in September will be very crucial, because market might, if things start to deteriorate further in the economy, like for example unemployment numbers coming out this coming Friday, and if they don't do anything, market might start to freak out, right? So things to consider, but for now, market seems to be okay with all this information. So yeah, so the just to look at the index now, the Nasdaq composite did hit an ultra-day all-time high, which it passed the number 18,000. But it did retreat, and it was a downside reversal day, which is not really a good thing, and it ended up with a 0.2% loss. It is still above the 21-day line. It's currently sitting around 5.9%, above the 50-day moving average. And it's also on the 9th weekly gain out of the last 10 weeks. So so overall still looking okay. So here's the chart. Again, I'm just gonna go back, October 2022. We have this, basically, I don't think anyone doubt this anymore. It's a bull market that has been running since then. So if you count based on that, that's roughly, roughly like, almost 20 months now, right? 1 year and 8 months. So we enter into July, so we'll see how the second half goes. Generally, statistics shows that when you have such a strong run in the in the year, they tend to continue, but it wouldn't be as strong, but it's still, I think S&P average might be up 8% based on previous data, based on the current performance. So that's still a good possible end the year really strong. But with that being said, I do anticipate more volatility going forward, or more pullbacks and stuff like that. So but in general, the market breadth is getting stronger, so that's one thing I really like. But anyhow, so we have this 19 weeks up, back in late 2022 and starting there, and it was a 19 weeks up, and then we had this quite a severe correction here, 13% weeks down. Then we have another 21 weeks up, and this started like I think it was like November, really, end of October, and then we run till New Year, and then we had this another mini it wasn't quite a correction, it was more a pullback, so that was 4 weeks down. Then now we're running into the this current rally is 10 weeks up now. So if we follow the schedule, we might have more room to run, because you can see the last two rally did run a lot longer. And right now, because market breadth I feel is improving, so that really give the market more energy or more powder to go higher. So yeah, let's look at the daily chart here. This rally so far right here looks pretty decent. You can see like it's here is a little bit more acceleration than here. So then we had this pullback, right? Really strong 3-day pullback, and then we ran again, and you can see on Friday we hit the 18,000 mark, like I believe 18,035 to be exact, and then it pulled back from the intraday and closed below the previous day, and so this is a downside reversal after hitting a round number 18,000. Generally, that's not a good sign, just because that's where a lot of people got trapped, because they think that it's finally hitting the 18,000 mark. So so it's important to now see where it goes, right? Like, are we going to start falling apart here? And so that's something we want to be really cautious about. Or maybe it's just going to go sideways, right? Maybe it's just going to go sideways and wait for this 50-day to catch up, and then before taking off again. So that's the ideal situation. So we'll see. I mean, like I say, a downside reversal day is never a good thing. This right here was a downside reversal day, but you can see it came back up another 2 days and make a new high before falling apart. So many things could happen. So all kinds of scenarios could happen. No one really knows. So the best is to watch the stocks and see how they perform, and maybe even cut any weak ones, just so that in case we do go into a bigger pullback, you're not going to suffer that many losses. So let's go into the intraday chart. Again, we have this really strong run here in the morning because of the PCE number we just talked about, and inflation looks very tame and everything looks good, and this this move here is very strong, but it really the fire really dies down after that, and you can see the slope of the drop is pretty significant as well. It wasn't just kind of slowly drifting back down. So that's the one thing I don't really like, how fast it came back down. and also, you know, it gave up previous day's gains. It didn't undercut the Wednesday low yet, so but we could easily open Monday, you know, gap down and hit, and who knows, we might even test this low right here. That's what this could happen. If it does test this low, this is from Monday close, so we go back to Monday's right here. That was right here at the bottom right here. So I mean, you know, I'm not sure if that's gonna happen. We'll see. It could happen, and I said, you know, anytime we have a downside reversal from a round number, you know, because this is the third time now, you can see it's trying to, you know, come near that number and basically got rejected. And so, you know, sometimes when that happens too many times, it gets more obvious to people that this is not working, and people, you know, short the market, and that could you know, and sell into the strength here, and you know, any strength here they may sell into it, and then we might see more drops here, right? So, you know, just want to say that, you know, anything is possible right now. The current SMA here 50 here, it says 5.9% as we saw earlier. So, you know, it's not like a big gap, but it's also not a small gap, right? So this gap right here, you can see is much wider than previous rally, right? From the bottom here. So, you know, even those ones eventually they crack, right? So so here we have another one right here, but this was the widest gap, and then, like I said, we haven't seen the pullback much. Like, I mean, we saw this, but it wasn't big enough pullback, right? And so now we still, you know, I'm not saying extended, but it does look a little bit extended, right, from the chart here. So even though it looks like only 5.9, like, let's just round up 6%, it doesn't give it much room to run from a technical perspective, because generally it doesn't run too far from the 50-day. So that's the only problem. Like I said, you know, some of the IBD guys are saying, hey, let's hope that it goes sideways and give it more time. You know, even like 1 or 2 weeks here, and that will give the 50-day to catch up, and that will give it room to run. So that's the ideal situation. But like I said, you know, it's best to watch your stocks as well. And don't forget to watch follow our stocks video after this market recap. There will be another video. We'll just specifically talk about the top 50 stocks or so that I follow. This is S&P 500, very similar chart. You can see here we have this rally and then pause, and then now we have this rally again. Right now, you know, we did have a little down week here compared to Nasdaq, but it's so minor that, you know, it's really insignificant. If we go into the daily chart here, we see very similar problem here, right? Which is, you know, it hit that 5,500 number. It went above it, like 55.23 was the high intraday, and then it closed all the way below the previous day. And so, you know, I mean, it's still above the 10-day, the green line, but again, we gotta be careful whenever we have to see those kinds of things happening, just because downside reversal from a very psychological number is usually very big deal. Like, you know, that's the markets have top based on that, you know, so we have to be careful. And this drop is you know, again, you know, undercut Thursday's low. It hasn't, I don't know if it did, it may have undercut Wednesday's low too, but it's so close to other days lows here. You know, this is a big support level. I would say if it undercuts that, that might smell trouble, right? Because that's a lot of days of support level, and people might start to lose confidence, and stocks might start to get tripped and so forth. So S&P definitely look weaker than Nasdaq right now, just a little bit, but yeah, let's watch this level around here, because, you know, we did, like I said, we did see lots of support here, and we don't want to lose that support. And as far as the 50-day gap here between the price, let me see, SMA 50, 3.6%. So it doesn't feel too extended, but it is the highest gap, right? Like, you know, this one right here, even here, it doesn't seem that bad. But yeah, very similar right here, like this gap right here between 50-day and the current price. So yeah, we'll see. From that perspective, S&P doesn't look as extended as Nasdaq, but Nasdaq is always more movement, so the range will be bigger. Yeah. So because Friday was a downside reversal day and volume came in pretty high because it was the last day of the month as well. That added distribution day to both Nasdaq and S&P. So it's only one day, but we'll have to continue to monitor. If more distribution days will start to happen, then that's not, maybe the market's due for a pullback of some sort. On Friday, the other thing that really interesting was advancers actually end the day with an edge on the decliners on both NYSE and Nasdaq, and volume was high because rebalancing of the Russell index, and so yeah, heavy volume on selling is a distribution day for both index. So we're going to jump to the IB newspaper here to look at this advanced decline daily line on NYSE. You can see, it's very subtle here. Let me just see if I can make it bigger. But it does look like we did have more advancers, and the actual number is 1422 versus 877 stocks up versus stocks down. So we have more stocks up, which is very surprising, right, on Friday, given that both index actually closed lower for S&P, and then Nasdaq also slightly higher, 1914 versus 1571. So again, it looks like more stocks are moving up than down, and that means the breadth is improving. And maybe mega caps, most of them were red on Friday, which is also interesting. Maybe those guys are taking a little bit of a backseat right now, while other stocks trying to come up. And we're going to see lots of stocks moving right now. I'm actually surprised how many stocks are moving up. So we'll look at that list. Make sure you follow that video on the top list that I'm going to talk about. So yeah, Dow, it only did 0.1%. But the big news was Nike, which is a component stock in that component. It plummeted 20% on disappointing results. Dow is not the strongest index, and you can see, but it has, make higher lows right here, and then so far higher lows here as well. But it is a reversal on Friday, but it only closed down 0.1%. So maybe that's okay. So we'll see how it acts here, but it has found lots of support around this level. So let's see if it can find support again. If it does, that'll be good news, and we could see a more momentum going upward, and maybe this time we'll pass this level and goes towards 40,000. So that's what we're looking for here. So yeah, I just want to quickly show the Nike chart. It's a very ugly chart right now, just because it really plummet quite a bit, 20%. Again, we've seen so much consumer numbers going down, sales, sentiment, so many things related to consumer are going down. And I'm not sure what to make of this at this moment, because the Fed keeps saying they're more modest, but yet the stocks are getting punished so bad. I know Nike have other issues. I think they mentioned China sales are also slowing down, so that really hurt them. So yeah, things to watch, and with the Fed keep delaying the rate cuts, whether this will turn into something bigger that will hurt the market later down the road, we'll know sooner or later. But this is really not good news for some of the retail. So this is the Russell chart. Yeah, on hindsight, just looking at it from, it's very messy. You can see, again, I'm just drawing the big trends right here. And again, what we see is this big range here. It's been stuck between really 1900-ish to 2100, and we have seen so many resistance. But anyhow, recently, right now, in the last 10 sessions, you can see we are making higher lows, which is really good sign. And not only that, Friday, I was surprised how it closed, because it actually went up at the end, and look at that, it came above all the short-term moving average as well. So this is really good sign. So we look at the intraday. Yeah, we saw a huge boost at the last half an hour here, so a bounce back here, and we didn't see that in S&P and Nasdaq as much. So that's a really interesting move at the end of the day. Now I'm not sure if this is a fake move. We'll see on Monday. But you know, a lot of stocks on my list did follow that movement. So that's, I think somehow that, you know, to me that's a really positive sign, because you know Friday close, whenever it goes down, it's never a good thing. But here we're seeing, you know, some really improvement technically. So hopefully, you know, small caps may continue to do well, and yeah. So this is the IBD 50 stocks. It didn't do as well on Friday as well. It reversed. You can see it close, you know, again at the bottom, and also undercut previous day's low. But overall, this chart still intact in terms of, you know, this cup, and then we have this pullback right here, which is kind of like the handle, and then we went up higher, and then we pull back. Now we have a higher handle in a way. So overall, you know, we are still waiting for it to come back above this trend line right here at the top. But so far at the bottom, we are seeing higher lows, and if it continues to maintain the higher low, hopefully it will break out again, and this time it might actually work, you know, because this so far it has failed twice now. Some people gave up after that, but anyhow, so you know, this is the top 50 stocks. Again, if you subscribe to IBD 50, you know, you will see the IBD 50. So what does that tell us? That, you know, the 50 growth stocks that they have are, you know, having a hard time right now for sure, but at the same time it's more of a holding pattern than a sell pattern, just because it was able to keep making higher lows and, you know, holding at this level. So again, hopefully you know, this digestion will give it time to eventually move out again, right, just like the index. So we'll see what happens, but not a negative sign, even though it closed lower on Friday. But you know, but if it does break, you know, again, we see this 50-day line right here, the red line. So if it does break that, then, you know, then the whole trend momentum might have changed, right? So that's, I guess that would be the cautious part. It could happen. So again, we'll have to be careful around that. So there's not much news next week. We do have Fed minutes come out on Wednesday, so I'm not sure if they'll say anything new, which is usually unlikely. Then we, you know, yeah, then we look at we do have Wednesday, I think Thursday, July 4th, right? So if I look at the calendar here, yeah, Thursday is the holiday, Independence Day in the US. So then we also have the ADP employment report on Wednesday, and then finally on Friday we have the big day report for unemployment report, which is forecast to add 272,000 jobs, which is pretty good. So let's see what happens there. There's no earnings news, not much, nothing significant anyway. As you know, we wind down the earnings season, and now we're entering July, and you know, usually by second, third week of July, we're going to start to see more earnings again. Here's the mid-cap S&P. You can see the downtrend line has been drawn here. It still hasn't come back above it, but it did, you know, starting to find support at the lower range. This is the equal weight S&P, and you can see it's kind of stuck in this range. It tried to come out here, but it fell, you know, around that trend line there. But the bottom range is, you know, again, finding support. So far so good. But like I say, you know, we are kind of at a critical point. If this, you know, crossover, then we might lose breath and momentum there. But you know, but right now it looks okay. It's just sitting at the 50-day line, and it's trading really tight, which is a good thing. But like I say, we kind of near the bottom range, which is not what we want to see. We want to see it closer to the higher range. But again, we got rejected twice now, so around that trend line. Let's see if it can hold this pattern, and hopefully eventually it will move back up. That's the idea. The Nasdaq equal weight 100 is slightly better. As you can see, it's near the top of the trend line here, near the breakout point. But it did get rejected again on Friday, so I'm not sure what to make of it. It's definitely not good, just like the general index. And now, you know, this is very tight range still. On Thursday, it did make a lower low. compared to the previous days here. But this looks to me like a very tight, handle. But like I said, it sucks that Friday it couldn't get out and it reversed. But let's see how next week goes. The pattern is still okay because it's still, like I said, very near the top of the range, right? So if we can withhold whatever selling happened on Friday and start to move back up, there's a high chance this will break out this time. So here's the 10-year yield. It's been on a downtrend in a way. You can, it bounced a little bit here, but then it fell again. And this is, in a way good news because like the yield going down means the inflation and in general the bond market is okay. And right now it's trying to come back up again on this black line, which is the 200 moving average. You can see on Friday it did bounce. It basically did the opposite of the index. It kind of went down and came back up and closed at the high. So but overall, you can see the 50-day is starting to curve down as well. So that might be a good thing because it might find resistance there and it could make this lower. So and again, this will put more expectation on rates going down in the future. So here we have the UUP, which is the dollar bullion. So again, this base here is very significant just because it's quite flat, and then we it did pull back here, but then it come out and then it pull back. But overall, the trading is very tight in general, and it's riding the 10-day line at not a fast pace but a modest pace here, but it is making higher highs every time as it bounces back. So yeah, something to watch. I mean, again, this is on a big uptrend right now, and it could continue, right? So something to watch out because in general this is not good for global economy when it's that strong. So yeah, and we talk about this oil price here. It continues to this is a uptrend right now. It holds so tight, like I don't even think I can see that in anywhere how tight this is trading. Like this is very surprising to me how tight this is trading, and because this is in an uptrend as well, it's just really a bullish sign. And I'm starting to see more and more stocks creeping up onto the top list here. Now it's starting to see quite a few in the top 100. So if this trend continues, who knows, oil and gas stock might become the leaders, in some sense. But yeah, right now is, like I said, this is just so strong. I'm very surprised. So if I see any oil gas stocks start to creep up in my list, I think I'll probably take position in them just because this doesn't, like, this last week was a test, and to me that passed, and so that gives me a confidence in that this could continue. So gold price, or gold shares, still having a tough time. We have a low on Wednesday, but it bounced back. But yeah, overall, I don't like this pattern just because it's now sitting under the 50-day, so many sessions, and then the 50-day, now you can see the red line starting to curve down. So I don't like that. And because the gap is still so big, right, between 50-day and 200-day, who knows? This might actually correct lower. Like, there's a high possibility, high chance. And we haven't been sitting at the top half of this range. Most of the time it's below, and just shows that there's a lot of selling, and every time it comes out, it just knocks back down. So I'm leaning more bearish now, just because of what's happening this last week. So overall, IBD still have a confirmed uptrend signal, which is pretty high in terms of allocation, 80 to 100%. Overall, the week, it was fluctuating. You can see here on both industry groups and number of stocks, the net accumulation was good on Monday, but and then it kind of dropped Tuesday, Wednesday, Thursday. Overall, you can see the numbers are not too substantially different. So meaning there's lots of distribution as well, accumulation, But overall, you know, yes, those 3 days, middle of the week was more distribution. But surprisingly, on Friday, with the high volume day, we're seeing more net accumulation than distribution. You know, you can see 481 stocks are actually accumulated, while 337 are being distributed. And from the sector perspective, you know, again, we see in general the trend is that, you know, commodities are doing well, right? You know, and probably a lot of them attribute to oil and gas. You see on Friday, it jumped to 40. And on financial, look at that power, like 59, 4, like on Friday, 115 stocks got accumulated, net accumulated there. And then the technology also went up. Look at that, 58. So yeah, it looks like technology and financial has really come up. And like I said, probably oil and gas also come up. Again, Friday we did see a mild distribution day on both Nasdaq and S&P. So that gives it 2 and 3 on the Nasdaq, 3 on the S&P. If this reversal continues the downtrend, you know, we will see more distribution days. Then you know, we might have to be more cautious. But you know, Friday's accumulation really gives me lots of confidence that this market breadth will continue to improve. And again, we'll look at charts in the follow-up stock video. A lot of them are starting to be in a very decent uptrend now, which gives me again more confidence to continue to buy into this market. All right, here is a screen from McBoss Capital. Again, this is based on the accumulation distribution that we track, and so you can see Computer Software Enterprise Group is leading. Again, I talked about that last week. The software group are really starting to show their strength, and you know, you can look at some of this being accumulate here, like Frog, GoDaddy, IoT. You know, some of this are PSN, even Snow. So yeah, some of this stuff are being accumulated here. On the bank side, look at financial. They're really starting to show their strength as well. All the small caps, right? So it looks like Friday small cap went up a lot because, you know, look at the financials, and there's a whole list here, you know, in those regions, you know, that you can look into, and that's quite a bit of stocks being accumulated in those groups here. Then we have oil and gas. There you go. We're also seeing strength in oil and gas, and there's some of this here that you can also follow. Finance, savings, loan also starting to show some strength here. So again, another financial group. More oil and gas, field service, machinery, equipment. Again, you can start to look at this group here. So also showing strength. More banks here, Midwest. And then we have investment bankers and brokers as well. And then computer software, even in the financial area, those ones are showing strength, like ACIW, really strong right now. FICO, those are on my top list as well. Even Words, VRX, doing as well. Again, more drilling in the oil and gas sector, also doing well. We have even REITs are doing really well in that sector as a group. So that's also showing strength. So financials are really taking a bulk of the top list here. Then we start to come down to leisure services, which is more discretionary. And again, that you can see Carnival there, you know, Lifetime, you know, Fitness also there, Royal Caribbean, Vikings, right? So all these guys are doing really well. And then the bowling, I can't even remember the name, bowling one. Banks, Money Center, even the big banks are doing well. JPM and Morgan Stanley. Super Regional also doing well as well. PNC, really, you know, again, more financials. The Consumer Service Education Group also showing lots of strength. ATG is on my list. You know, we have pollution control here. Transportation truck also doing well. Again, some industrials here. Banks, foreign also doing well. Computer software special enterprise group like AppFolio, you know, Tyler Technologies. So those are also starting to move. Database, CFLT, CVLT, MDB, you know, really strong. Tech services group also moving. Then we have some semiconductor equipment groups still showing strength, like Form, which is on my list. Let me go down here. Media, radio, TV, also doing not bad. Oil and gas, more oil and gas. You can see here, refining group, international group, transport pipeline, you know, also doing well. Then we have more financials here, consumer loans, specialty here, and then we drill down, we have telecom, auto manufacturers, even some of them doing well. Household furniture, leisure gaming equipment, LNW is on the top list. Commercial service market research, medical products, so you have GMAT also on my top list here. ZimV is also making up to my top list. Machinery, construction, mining, here you go. Oil and gas integrated, more financial right here. Then we have mortgage related services, and then software desktop, we have Adobe, which is on my top list. So yeah, we have Duolingo as well. We have gaming, we have security. So we're starting to drill down to the lower, less attractive groups, but still under accumulation. So overall, really strong accumulation in those sectors and groups we talk about, which is yeah. We're gonna start to look at some of the big cap techs, but also those subgroups as well. So semiconductor group, you can see, you know, we have this strong run here, pullback, and this pullback is more significant. And right now, I don't like Friday's move. It really reversed, and you know that I never like a reversal, especially when it's near the 10-day. That usually show, you know, weakness, and you can see, you know, the volume did die down, but the reversal, you know, for me, it's not a sell signal, but it is a worry cautionary signal, because it could easily break now this level right here, and if it breaks that level, I can't imagine how many stop loss out there who's gonna get triggered. So be very cautious about this. Perhaps this you know, this really because this was the talk a bit ago, like a couple, like, yeah, 1.5 weeks ago, how far extended this is from the 200-day line. And we jumped to like some of the chip stocks like Nvidia. We saw the same action, you know, on Friday as well, you know, this reversal. You know, and this got rejected twice now, right, on this one. You can see right here on Wednesday and then on Friday as well. So that's, you know, negative. Now it's still, you know, you can see the lows right here. I mean, it's not, obviously there's still lots of people talking about this stock, especially analysts, and, you know, day in and day out on CNBC. I don't think there's not one analyst that doesn't talk about this stock right now, and that makes me worry, because there's just too much attention. Possibly it's time for it to digest after this, you know, I think, I don't know how many percent gain this is from the breakout right here, but, you know, it's probably close to 40%. But anyhow, yeah, and we are quite far away from 50 days still, and 200-day, but the 50 days coming up really fast. So perhaps it might, you know, like if it's going to scare more people, it probably needs to drop down to 50-day to shake out some weak investors before it possibly bounce again. That's what I imagine it could happen. And because of Friday's reversal, now it wasn't like super bad reversal. It only undercut by a little bit, right? Like right here. So I don't even know if it make a new intraday low here. Let's see, 122.60, 122.75. Okay, so I mean, it did make probably an intraday low there, but it didn't undercut this 2 days ago, Wednesday. So we still have that support right here, and we also have this support right here, which is from about 5 days ago. So so at least there's two support level is trying to survive right now. But like I said, I wouldn't be surprised if there's some bad news or something. This stock could easily break down above this. And like I said, I don't like this bounce. Generally, I like to see like this sharp drop and a sharp bounce, right? We haven't seen that this time. Instead, it went up a little bit and it went sideways, and it's losing steam, right? Because it keeps getting rejected. on the highs here, and look how fast it goes down at the beginning of day here. That's also a bad sign. Looks like a lot of people are selling. So yeah, so be mindful of this. Again, you know, there's no doubt Nvidia is going to take go up in the longer term, but in the shorter term, it just might be overheated, and just lots of people talking about it really makes me, like, again, worried that, you know, if everyone's buying it, then who else is left to buy it, right? At least for the short term. So yeah, let's jump to other chip stocks like ARM. And you know, this one looks slightly better on the intraday chart. Let's go to the daily chart. So you can see, you know, again, we have this sharp pullback, and now it's bouncing, right? Now Friday is a reversal, but at least it didn't even undercut previous day's low, so it looks pretty good. So that one looks okay. Let's go to another one, Taiwan Semiconductor. Very similar chart to ARM. Again, you see it went down, and then it kind of bouncing back again. Friday actually closed higher too, even though it closed lower the range, but it still closed higher, so that's pretty good. Let's see, Qualcomm right here. So this one, it's okay. I mean, it's a little bit weak on the bounce so far compared to the other ones. So I think I'll show you one more. Cyrus is one that's on my top list. This one is looking pretty good. You can see, you know, it's making new high on Fridays, and the up is on the uptrend line. The 10-day looking really good. This one. Another one on my top list, Form, also looking pretty good. It make a new high on Friday. Again, we have this pullback and this sharp bounce. This is what I'm talking about. I like to see that, but we didn't see that from Nvidia, right? So at least not so far. So this is look better. So we're gonna move to the software group. Again, we talked about this last week, how the software group is showing lots of strength, and we definitely saw that again this week. And you can see here's the trend line, and this week, you know, it was trading really tight, and then look at what happened on Thursday. Volume came in and just moved higher on that group overall. And then Friday, you know, even though the market went down, look at it, it didn't close at the bottom. In a way, to me, this is a follow through, because it closed, you know, in the middle range. So it looks really strong, and I'm liking this group a lot, and that's probably where I'll try to continue to focus more of my energy is there in that group. And you know, it's getting closer to the breakout point right here. And we're already, you know, pretty close to this level right here, 87.29. So I think we passed that. We just came back down and closed slightly under that. That's not a problem. Now the question is this like a little bit extended right now? Yes, it is. You can see it's further away from the 10-day. So don't be surprised if it come down and then before it take off again. That's the only cautious part right there. But for some stocks, it might continue to move, and we'll look at that, let's say, in the follow-up video. But for now, we're going to focus on the big caps here. So let's jump to Microsoft. So Microsoft have a pretty bad reversal day, you know, but before that, Thursday, it make new high. So again, overall, this trend is still on the uptrend. It's just, you know, pulling back to the 10-day, right? So that's again, you know, most stocks do pull back to the 10-day. It doesn't get too extended from that. So that's Microsoft. Let's jump to Google. So you can see Google actually this week it tried to accelerate, and you can see the 10-day, it's at a pretty strong slope right now. Now Friday again, it didn't make new high, but it reversed, you know. Thursday it did make the new high just like Microsoft did, but the 10-day slope is starting to, you know, it's starting to look like a stronger slope. So that's good news, and you know, we are at near the highs. We'll see if that continues, but again, I think most of these guys are going to move pretty close to each other, like in terms of direction. So yeah, let's look at Amazon. So everyone's talking about Amazon, you know, they're going to compete with Temu and another Chinese company, so they try to have a lower sales price item, stuff like that, and then the stock took off right on Thursday and Wednesday, Thursday, followed through on Thursday. So this is a nice breakout. I did take a position in this, and then Friday it did reverse again, but now it set up the 10-day moving average to be this slow, which is not bad. So let's see how that performed going forward. Next one is Meta. Meta also came out on Thursday as well. You can see this nice cup with handle pattern right here. It did fall back, so again, it's always tough when you buy into a breakout and it pulls back, and the market is just not in the best condition for this type of stocks right now. It looks like mega caps, like I said, could be taking a little sideways movement or break here. But maybe who knows how long this will last. It could last a week or two, I don't know. But anyhow, but even then, I think the slope is starting to change a little bit as well. So that might help moving forward. Let's see how that goes. But yeah, I don't like this really sharp drop at the end. So you almost feel like people trying to dump shares, near the end. But obviously this is just could be rebalancing stuff. I don't know. So we'll see. Monday will be better, a new start, and we'll see how it performed then. But the breakout is it's a failed breakout so far, but at least it tries to, right? So that's not too bad. Again, we'll see how the volume comes into. So far, it's been more on the selling side, but this one is more considered the one before. This one seems like it's a very tight range, so usually I don't even count that. And here's Apple again. We had this strong breakout right here, really strong 2-day breakout, and then it went sideways, which is a really good thing, but then it did kind of give up and fall back down to the 10-day. Now it's at the 10-day, and so far it has found support. And Friday we closed back down again, reverse, and now we're at 10-day again. So this is critical juncture for most of these stocks, because the short-term 10-day, the 11-day, the 21-day is never far away. So even if it does undercut the 10-day and hit the 21-day and bounce back, that's normal action. Sometimes that happens because the market condition may be just a little bit wobbly. And like I said, the index maybe need to take a little bit more time to digest, and that's it could happen to these guys, and that's what's happening here. And then we have Tesla. Lots of people talk about this stock this week because it kind of break out, right? Like from a a lower trend line right here. So on Wednesday, high volume, and then the other thing that most people talk about is how low the volume is on the selling side. So that gives it that not enough sellers, so therefore when buyers come in, it's going to push the price higher. And so this is happening right now, and yeah, it looks pretty good. Friday it followed through. It did close at the lower range, but still it's still an up day, so this is very positive. I think Charles Harris also tweeted about it, as he's a big owner of this stock, and this is looking very healthy. It's not on my list just because it doesn't have positive earnings going forward, and in terms of growth, so that's why it's not on my list. But at least for a trade, it looks like it might be working right now. Of course, there's also people talking about this 200-day line. Some people never buy a stock on the 200-day line, so this is going to be a big resistance level. So we'll see how it performs, whether it comes back down when it hits it, or whether most likely I think it might, even if it's very positive, it will stay around here to digest, and then before it takes out, right? So so that's what could happen. So this is Netflix, the last stock I was going to talk about in this video. It broke out and it pulled back, and then it traded really tight. You can see all these blue days here, really tight. And then now it kind of pulled back again to the 10-day, and then trading really tight again. So overall, it's not a high, fast moving stock, but it is moving in the right direction. So sometimes you have to give it some patience. But you know, obviously, if this rally were to continue another 4 weeks or even 8 weeks, like, you know, there's still lots of room for it to run, and you know, the 20% is around this mark right here. So, but like so far, it's been moving really slow. But sometimes, you know, it could take off, right? And especially if there's some news. So we'll see what happens here. But the chart looks pretty healthy still. Thank you for watching this video. Make sure if you like anything, like and subscribe. Really appreciate it. I'll have other video which talk about my top 50 list, stocks and so forth. Please follow that one as well. Thank you.